Okay, sorry this took so long to come out. Let's just get right into it. We're going to go year to date, all of the stats for New Brunswick real estate. I'm going to cover a little bit of Northern New Brunswick, St. John, Fredericton, and of course, Moncton. Starting with Fredericton, so for the month of December, the sales were up 14.5%. The new listings were down. MOI was essentially flat, though down 0.1. Average price was up a little bit. Median price is up 9.7%. Median days on market is actually down a full 10 days from last year in December, and the sale to list price ratio is actually up. So what we're seeing is a market in Fredericton that is actually doing much better than at least what I can see from most of New Brunswick. This should really surprise nobody. Fredericton, of course, is the home of CFB Gagetown. It has a lot of government jobs, and it is more or less the economic center of New Brunswick. It's definitely a lot more stable than Moncton, in my opinion, and it has very similar upside to St. John, though maybe not as much, in my opinion. Overall, it's a market that is showing signs of life. At the very least, it is definitely heating up, and this is not just a single month sample size. This is actually a hotter market than it was last year in most statistics. Now into St. John. So I've been saying this for a while. St. John is a market that I feel has a lot of upside, but one that definitely is a little bit volatile. It's one that didn't show much volatility up until now about the tariffs. However, we're starting to see a little bit of that set in. Year to date, the sales are up. The new listings are up 12.5%. The active inventory is up a little bit. The SNLR is still firmly in seller's market territory. MOI is north of 3. The average and the median price are up 5 and 4% roughly. However, in the month of December, it definitely took a little bit of a beating. Now, I will say that this is a small sample size. We're talking about 117 total sales. That is down 10% from last year, and it's down 37% from 2020, just for the month of December. Keep in mind, small sample size. New listings were down 10%. Active inventory was down 3.8%. The sale to new listing ratio, this is absurd, but it's 134.5%. It's not the highest it's ever been, but that is the fourth highest number it has been since 2020, which were all north of 135%. MOI of 3.5, that is up a little bit from last year, but it's actually down from 2023 and it's down from 2022, and it's exactly what it was in December of 2020. The average price is down 8.9%. The median is down 3.6%. The sale to list price ratio is 102.6. So overall, this is a market that is just firmly in seller's market territory. It's one that is definitely a lot more resilient than I think people were expecting. It was the number one city listed as being exposed or vulnerable to tariffs, but it's definitely showing a lot of signs of life in its real estate market. Now onto Northern New Brunswick. So this is an area that is a very low liquidity market. It can take a long time to sell a house here, even if it is priced correctly. So in the month of December, there were just 118 total sales. That is, however, up 9.3% from last year. The new listings are up 5.3%. The active inventory is down 8.4%. The MOI is at 6.2, which is actually down from 7.5 last December. And the average and the median are more or less flat. The average is up 0.9%. The median is up 5.3%. The sale to list price ratio is at 92.3, and the median days on market is just over 2 months at 63.5. This is a market that is, of course, low liquidity, low volume, but it's one that's definitely showing a lot more resilience than I would have expected. Northern New Brunswick is not known for having a resilient or stable job market, and it's definitely not one that's known for having a real estate market that moves much at all. Year to date, too, it's a lot of the same stuff. The average and the median price are both up 6.7 and 12.8% respectively. The sale to listing ratio is still firmly in seller's market territory at 63.2. The sale to list price ratio is at 94.2% on the year, which is standard for the area, and the median days on market is at 50. I won't get too much into these markets because they're not ones that I really work in. Generally speaking, in St. John, you want to be in Uptown, you want to be in Rothesay, or you want to be in Quispam. I'll leave the nuances and the details to the people who work in those markets, but that is more or less St. John in a nutshell. One thing I will say, though, is that the high-end areas of St. John make the high-end areas of Moncton look like nothing. It's really an area that I would recommend going through before you rule it out entirely. As someone who would most likely live in the downtown core, there's a lot to love there, a lot of really nice, well-kept old homes. But generally speaking, this is a market that is going to be carried a lot by the higher end stuff, no matter what is happening in the median or lower ends of the spectrum. Fredericton, generally you want to be close to the two universities, UNB, and I believe St. Thomas is the other one. You want to be close to that core. However, there's nothing wrong with being in Oromocto, close to Gagetown. Obviously, it's a very steady area. Then you also have Lincoln, which is home to a lot of people who work in unions. So a lot of, plumbers, pipe fitters, that sort of thing. It's really hard to find an area in Fredericton where there's not some sort of stable job base to back the real estate market. Northern New Brunswick, it's the area I definitely know the least about. However, no matter where you go in Northern New Brunswick, there is going to be a relatively low level of liquidity. So just make sure what you buy you're able to commit to. Now let's get on to Moncton. So Moncton, of course, is the area I actually sell in. It's the area I was more or less born and raised in. I've been here over 30 years. I know quite a bit about it. I'm going to spend a lot of time on this one. Just for the month of December, the sales were down 6.2%. New listings were up 10%. Active inventory is up 20%. The sale to new listing ratio is still at 111.9%. However, this is very standard for this time of year. If you've been watching this channel for a while, you might remember last May where I predicted that we would be in a seller's market by the end of this year. Well, two things. One, that was before the board fixed the statistics section of our MLS. I used to pull my own stats from MLS, but the definition of sale was incorrect. They finally fixed it, but that's why that prediction was what it was. Had I had access to relevant data when I made that prediction, maybe I don't make that prediction. But with that being said, generally it is never in a buyer's market territory in December. Firmly in seller's market territory. If I had to adjust my prediction, I would say if we do hit a buyer's market territory, which I still think we will hit soon, I think we're most likely to hit it in the month of March, April, or May. I would probably assume towards the end of April. It was last April of 2025 where we were one bad week away from being in a buyer's market. So it's very important to watch that 1 month because that's usually when the most amount of new listings start to kick in and sales really will make or break. So yeah, the MOI 4.9, some people might say that's a buyer's market. I don't look at the MOI as a way to determine what type of market we're in. I look at it as a statistic that shows how stale the inventory is. And 4.9, that's about the highest we've had since 2018. So it's a very slow moving market despite what the rest of the statistics say. The average and the median price are up 7.2 and 1.9%. The average of 375 and the median of 345. This is the GMA too. This is everything basically within 55 minutes of the downtown Moncton core. So Dieppe, Riverview, Shediac, etc. The sale to list price ratio 96.6. So that is a little bit better than last year, but not that much, and really not much to write home about. The median days on market 48. This is a standard December market, and it's one that I think, even though the sales are down, is better performing than one would expect. However, it is an indicator that we might be in for a market that is likely to be disappointing if you have high expectations. The sale to new listing ratio is 20% lower than it was in December of last year. It's essentially what it was in 2023, and it is 10% lower than 2022 and about 20% lower than 2020. Now, year to date, we actually have a lot of data to look at. This is a good sample size, 3,351 sales. This is for the entire year. The sales were up 4.3% from last year. The new listings were up 9.1%. The active inventory was up about 30%. The sale to new listing ratio was down from 67.4 to 64.4. And the MOI went from 3.6 to 4.4. So this is a market that is absolutely slowing down by the data. And it's one that we should expect to continue to slow down unless some sort of data comes out that changes the trend of this data. There's a saying, the trend is your friend. The trend right now shows that this market is continuing to decline relatively quick, even though the average and the median price are still hanging on. Those are the only two statistics that are hanging on. I've been talking a while now for this gap of new listings to sales. Well, the gap of new listings is 9.1 and the sales are only up 4.3. So that's not what you want to see for the direction. If those two numbers get a little bit closer together for the first 4 or 5 months of the year, we might be in one of those territories where it'll trade sideways, but until we get to that, it's just speculating. So it's best to assume a market that is going to be volatile, likely trending downwards. Now for the single detached. So the single detached for the month of December were down 20%. The active inventory was up 7.1%. The new listings were down 3.8%. MOI went from 3.8 to 5.1, and the average and the median price are up 8.9 and 1.8. Moncton has been doing this for the last 2-ish years, where the rest of the statistics continue to go down, but the price goes up. I won't get into that. I've gotten into it before. There's no point. I just don't see the whole point of the prices going up when the rest of the market is going down. I think maybe some people making purchases might not be analyzing the data as closely as they should. In 2022, with the declining inventory, it made sense. Has not made sense since 2023. Year to date, it's a lot of the same. Sales up 8.3%, new listings up 8.1%, which is more of a sideways market, in my opinion. The sale to new listing ratio is still firmly in seller's market territory at 65. The average price up 2.4, the median price flat. So that right there, year to date, shows a market that is trending sideways. We will want to see if the trend of just December is different than the trend of year to date. We'll have to analyze this very closely as the year starts to unfold. But now let's get into the semi-detached. There's no point in going single month data for the semi-detached, even though, you know, you could look and say sales are up 30%. That's because there were 30 sales. Let's look at year to date, a full sample size, 410 total sales. That's down from 8.3% from last year, and it's down 13% from 2020. This is the lowest amount of semi-detached sales we've had since 2018. New listings were up 8.7%. Now, if you drive around Dieppe, East End of Moncton, or North End Moncton, you're going to notice a lot of brand new semis. That is absolutely going to impact the sale to new listing ratio. We're seeing it right here. The SNLR at the end of the year now was 68.7. For the last 3 years, it was always over 80. The last 4 years, it was always over 80. Actually, the last 5 years plus, over 80% every single year. And the absorption of that inventory is nowhere near where it needs to be. The MOI over the last 5 years was 2.3, 1.8, 1.7, and 1.8. It is 3.3 right now. So that is a market that is absolutely not absorbing the new supply at all. Yet the average and the median price are up 2.8 and 1.4%. That is likely because a lot of this new inventory is more expensive. We're talking semi-detached with garage, en-suites, that sort of thing. They're just going to be more expensive products than, you know, a 10 or 15-year-old semi. So this is something to watch. Keep in mind the biggest price growth that we saw in the semi-detached market occurred in the third and fourth quarter of 2021, and then again in the first and second quarter of 2022. So I don't know if much is going to happen in terms of movement and price point in this product this year, but 2027, I would imagine something might happen. All right, now on to Dieppe. So Dieppe, year to date, the sales were down 10.3%. New listings were flat. Active inventory was up 43.9%. The sale to new listing ratio was down almost 10 full percent. The MOI went from 2.4 to 3.8. The average and the median price were essentially flat, negative 0.6 for the average, and the median up 1.3. The SLPR went from 99.6 to 98.5, and the median days on market went from 28 to 36. So Dieppe is probably the number one market. If everything starts to slow down and it becomes a buyer's market, Dieppe is the one I would definitely recommend the most. I've said this before, there's no bad areas in Dieppe. I think Dieppe has a lot of value and a lot of upside, particularly close to that new downtown core. Now, what product category in Dieppe? Essentially anything that's not a semi-detached. I am partial to a lot of the homes around, you know, Orleans, Gould Street, everything close to Uniplex, everything close to Rue Marché, Gauvin. It's really hard to go wrong in Dieppe. I actually don't even think I could give you a single name of a street that I don't like in Dieppe in terms of value. All right, next up, Riverview. Riverview is my personal number one choice for first-time buyers. If you have a budget and you want something under $350K, you will not get anything close to the value that you are going to get in Riverview. One thing I will say, though, a lot of the homes in Riverview are going to be built in the 60s and 70s, which means you're likely to run into aluminum wiring. Make sure that you get an inspection and make sure that you get an electrician to review anything that you buy. Riverview can be divided up into west, east, and central. So central, anything like McAllister Park, anything towards that middle, obviously the middle part, areas like Cleveland, etc., Riverview Heights. It's hard to find anything in central Riverview that I don't love. Then you go in West Riverview. That, in my opinion, is the cream of the crop. That is my favorite area in Riverview. And then on the east end of Riverview, the cheapest of the cheap area will be Point Park. However, Point Park, as long as you're paying the right price, there's nothing wrong with that. It's really hard to find a bad house in Riverview. Just keep in mind the year built. Now, as much as I would love to tell you that the sales are down in Riverview, they're actually not. The sales year to date are up 18.4%. New inventory is up 26%. That right there, by the way, is a market that it's just happening. A lot of stuff is happening. Whether you're buying or selling, expect activity no matter what you're doing, unless you're wildly overpriced. It is a good market. Active inventory is up 64%. The sale to new listing ratio went from 77 to 73. The MOI went from 2.3 to 3.1. The average price is up 2.6, and the median price is down 1.4%. The SLPR went from 100.8 to 98.3, and the median days on market from 24 to 31.5. This is still a seller's market. This is one that I would actually be surprised if it goes into a buyer's market. I think Moncton-wide throughout the GMA, we wind up in that buyer's market, I could see Riverview being the last holdout. I'd actually be surprised if Riverview ever sinks below 50%. All right, now on to just Moncton. So this is the central, east, west, etc. This is just Moncton, not Riverview, not Dieppe, not Shediac, nothing like that. The sales for just the Moncton area up 2.1%. New listings were up 8.7%. Active inventory was up about a third, 33.2. The sale to new listing ratio went from 71 to 67. MOI 2.8 to 3.7. Average price of 400K, it's up 3.8%, and the median of 375 is up 2%. The SLPR essentially flat from 99 to 98, and the median days on market is now officially over a month for the first time since 2018. Now, there's a lot of different areas in Moncton, so it really just depends where you're going to buy. I don't want to get too much into it in this video. I find it'll make it too long, but Moncton, it really just depends. You have the north end for the high-end stuff. You have the east end, which has high-end and middle-level stuff, and then you have, of course, the west end, aka Central Moncton, which has, in my opinion, the best values, probably the most upside in the market right now. Now, outside of that, if you have questions about specific areas or product types, just send me a message or preferably give me a call. My phone number is very easy to find, 506-232-5452. I actually answer my phone, and if I don't, I call you back pretty quick, so you don't have to worry about any, assistance, anything like that. You call, I answer. That simple. Now, with that being said, let's get on to the economics a little bit because they are beginning to matter. There are two categories for mortgages. There is, of course, the fixed rate and the short-term variable rate. The variable rate follows the Bank of Canada overnight policy rate. That is typically what you're going to hear when people talk about rate cuts and that sort of thing. However, if you have a fixed rate mortgage, which is statistically most of you, what you really want to look at is the Canada 5-year bond. Now, I'm not going to get too much into my opinions and insight on the movement of the bond because it's very complicated and nuanced. But one thing I will tell you is that the Bank of Canada's overnight rate essentially has nothing to do with what your fixed rate is going to be. Now, what things can influence the Canada bond yield? Well, one of them is the Japanese carry trade. I will let you Google that. It is very complicated. Essentially, what happens is people borrow money against the yen, so the Japanese currency, and then invest it into things like Canadian bonds. The bonds and the yields are inversely related with the price. So the more people buying the bond, the lower the yield goes. The less people buying the bond, the higher the yield goes. So obviously, when more people buy something, the price of it goes up. So more people buy the bond, the price goes up, the yield goes down, your fixed rate gets cheaper. Now, what would cause someone to buy the yield? Typically, institutions are the ones that are going to buy the bonds. These can be insurance companies, pension funds, hedge funds, et cetera, et cetera. I won't get into the reason why they would buy that because it's very speculative and frankly it is outside of my wheelhouse and above my pay grade. So if you want to know more about that, there are definitely channels that I would recommend you look at. Things like Nolan Mathias, Economics Explained, that sort of stuff. Very good channels for that. I won't get into it. What I will recommend though is that take everything with a grain of salt, especially when someone in my industry tries to tell you something about where the rates are going to go. Nobody knows. Rule 1 of economics, nobody has a crystal ball. So stop listening to people who think they do. Now onto this interesting headline that came out in December. New Brunswick population sees the highest quarterly decline in decades. So in New Brunswick, there was a drop of 0.1%. So that's about 1,000 people. Now keep in mind, when mania and speculation causes prices to go up, that is with the assumption that population is going to grow rapidly, not staying still and certainly not declining. So definitely keep this in mind when people start talking about FOMO. Now, in this article, he says the main issue is that we're seeing a lot of what are called non-permanent residents leaving. So their work permits end, their study permits end, and then they're more or less kicked out of the country or leaving the country. His words, not mine. So Campbell said last quarter, New Brunswick welcomed 2,900 permanent residents who are living here permanently to pursue their career goals. Now, keep in mind, New Brunswick is very bad at keeping the people that do immigrate here. We're good at getting them, we're not good at keeping them. So he also said there was a loss of interprovincial net migration, with around 3,000 moving into the province from other parts of Canada and 4,000 moving out. So this is very New Brunswick right here. And this will matter too. Of course, obviously, this is your rental market. These are your tenants. These are the people buying the houses that you're hoping to sell. So keep in mind that the population is not guaranteed to go up. And I won't get into the rate hikes. What could happen with rate hikes or rate cuts? It's very speculative because if I try to predict what's going to happen, I'm trying to predict what is Tiff Macklem going to do with information that I don't know exists yet. What is the producer price index? What is CPI looking like? What things is he concerned about? How bad is the economy? It really depends. And it's one of those things that as a realtor, someone who has no education in economics, I'm not going to sit here and try and tell you anything about this. I'm just going to tell you to Be cautious, listen to what the experts are saying on economics, not people like me, and try to come up with your own decision. Make sure whatever you do is within your own risk tolerance and try not to do anything reckless. Real estate is a lot less like gambling than a lot of people treat it, and it's a lot more like a long-term investment. So buy real estate the same way you would buy an index fund. You're not going to check the value of it every day, and you're probably not even going to sell it in the next 3 or 5 years. So whatever you buy, make sure you can hang on to it for at least 3 to 5 years, and make sure you pay a price that is relevant to today's market value. Now, of course, I am a licensed realtor here in Moncton with Royal LePage Atlantic. My opinions are my own. They do not reflect other opinions of the members of the New Brunswick Real Estate Board, other affiliated boards, my company, anything like that. They are only my own opinions. This is real estate advice, but it might not be applicable to your specific situation. So make sure you consult a local qualified professional prior to making any decisions related to real estate or finance. With that being said, I look forward to a much more consistent year on YouTube this year. I've definitely not been consistent. I'm not going to give you a bunch of excuses. I'm just going to tell you I'm going to put some work in to make sure that the content is more consistent. It might not be the best quality, but there's a saying, done is better than perfect, and it's something I'm going to try and remind myself every day. So thank you everyone for being patient. I'm going to try and give good quality analysis throughout the year, and I'm going to try and deliver it at a very consistent basis. Any opinions, any feedback, anything like that is very welcome. Please do not be shy. I take it very well. With that being said, have a safe and happy new year, and I wish all of you a great year.